Hi everybody, this is Bob Iacchino from Path Trading Partners, along with Mike Arnold. Just want to give you a quick weekly currency update. Looking at three of the major pairs today, the inauguration is over. The inauguration speech did have some protectionist tilt to it. Some of the currencies were affected by that, mostly dollar yen, but Euro US dollar moved a little bit. Sterling US dollar moved quite a bit, so we're going to update you on that. Real quick, in terms of the euro, ECB talk last week kind of died down. No change to the bond buying taper that they laid out in the prior meeting. And then there was a little bit of talk from the ECB, tough talk from the ECB on euro clearing of the UK after Brexit. But let me go ahead and turn this over to Mike, and he can give you a look of what he's seeing on the euro US dollar weekly chart.
All right, great. Thanks, Bob. So here we have the euro US dollar weekly. You can see we rallied up. We're still in the rotation zone, what we consider a rotation zone. So this is still bearish until we get a sustained move above this upper moving average, which right now is a 107.70. So really, if we get a sustained move around above the 107.80 mark, we could be out of the rotation zone, especially if we get a close above there, and then we'll look for continued higher prices. Let me switch to the daily. You can see we talked about some of these levels last week, and we definitely tested them with the high of this green candle here. And then we tested the next one up where we tested about the 107.58 level. Again, if we get a sustained move above the 107.60 level, which would put us in here, watch for key retests, especially if this significant high that was left behind before, which is the 108.73 level. So you're going to have some potential resistance in here, but there's a lot of scalping trades you could take advantage of. And then if we continue higher, the next major level we'll be watching for is right in there, and then we'll watch run up. We don't have a lot of resistance into here, so we could see a big move, but that'll probably take longer than this week. So key levels you're going to watch, again, sustained move above the 107.60 level, and then moves possibly up to the 108.70 level if it continues higher and we have further dollar weakening.
All right, and sterling UK news, biggest news that we saw there, I mentioned a few minutes earlier, was that the ECB is starting to talk tough. Kind of a reaction to Theresa May's speech, I think, on euro clearing. Theresa May made those really hardline comments on how the UK was out, they were leaving, and that they didn't want to be part in, part out. And since they're leaving the single market of the European Union, the ECB kind of talked tough on euro clearing with them. We saw sort of a continuation of some of the things we talked about last week. So let me have Mike point it out to you on the chart again.
All right, on the weekly pound, we're still going against the rotation zone, but it's really flattening out, so it's not going to have as much weight. You can still watch for it to test upwards towards this 20 or 21 period weekly exponential moving average. We talked about on an update also last week how we have a potential massive double bottom, but again, we need a move and especially a close above the peak here before we can really talk about that trade, which would be the 127.44 mark. Let's switch to the daily. We also talked about some early potential trades, especially on a move above this high, which was 124.16. If we got a move above there, we're next targeting this 124.90, essentially the 125 level, where we come in with this other declining trend line. If we can get a sustained move, or especially a daily close above this trend line, watch for these next following levels to be targeted, which are the 125.72 level, and then beyond that, we target the 126.76 level. So those would be the next two targets for moves higher. If we do go lower, we have on a daily a rising rotation zone now, which may catch price action, and you could always go back and kiss this trend line goodbye. So you're going to get a lot of support around between about the 123.50 to 123.90 level if we do pull back. So watch for support in that area.
Again, whenever you hear mention of things like rotation zone, kiss the trend line goodbye, those are proprietary things that we teach. R zone equals rotation zone. Looking at the dollar yen, you can kind of see that. I'm actually going to flip to the daily real quick, but you can kind of see, we talked about these targets last week. We went up to that R zone and fell again. A lot of the talk fundamentally on the yen related to the executive orders that are going to be signed early today or sometime late today, taking the U.S. out of the TPP, and that's the Trans-Pacific Trade Partnership, and also renegotiation of NAFTA, which really didn't do anything with the dollar yen, but those are executive orders that are signed, and one of them affected this region. So let's have Mike tell you what he's seeing on the dollar yen chart.
All right. Weekly, we have this rising rotation zone. So if we break down the levels you're going to want to target are last week's lows. What was the last week's lows? 112.57, and then somewhere with this rising rotation zone, which would take us to about the 111.30. Keep in mind that this is going to move up on a daily basis, so that would be the farthest I'd target for any shorts. Let's look at the daily. We did reach the full target and slightly beyond it of our double top here, and then had a major snapback rally into the rotation zone where we continued back down. Now this has formed a double bottom, or a potential double bottom pattern. So potential double bottom pattern. We need a close on a daily basis above about this 115.62 level. Until then, that would put us out of the way of the declining rotation zone. If you're moving higher, your next levels for any bullish trades are to look for slight resistance around this 8, and then resistance around the 115 level will be key for any bullish trades. If we get above there, watch for the retest of these prior highs, which is the high of the potential double bottom. And then if we get above here, our target's going to be about the 117.90 to low 118 levels. So those are your key levels in the US dollar, Japanese yen. Just to reiterate, if we break down below last week's lows, any bearish moves you should look to test last week's lows, and then other levels you can look to besides the rising 21. You can look for a key target around the 111.60 level, and then below that, the 110.60 level, but that would mean we've gotten outside of the weekly rotation zone. You can see that farther level is below that, so I'd really be targeting the 111.64 or 65 level if we go lower and get below last week's low.
Thanks, Mike. Remember, yen is a safe haven currency. Two main safe haven currencies, Swiss and the yen, mainly because of their internal investment surpluses and their own currency. So that makes them safe haven. So these down moves you're seeing in the yen really kind of been the Trump unwind and nothing more. But if protectionist talk continues, you can further see dollar weakening against the yen from a fundamental standpoint. Thanks, everybody, and we'll check in with you guys as soon as we have something to report back. This is Bob Iacchino and Mike Arnold from Pat Trading Partners. Cheers. Talk soon, guys.